John Nadler, we had less than thrilling earnings from Rio Tinto this week, following in the footsteps of Kinross and Barrick and Newmont. When do we step in and buy the miners because they really are getting decimated?
Indeed, it's been a string of nonstop bad news from this niche for the past several weeks now. And of course, we've seen anything from analysts revising their expectations to CEOs getting the boot. In Rio's particular case, I think certainly the company is making all the right noises, and I think, albeit analysts have reduced their projections from $100 roughly to about 85 in the medium term for this firm. Look, at $50, $55, $60, it's, to me, quite a decent buy. But, a lot of this hinges on what people expect out of the global economy. And of course, any one of these firms that's involved directly in producing stuff has been suffering as a result of these really difficult conditions across the globe, China included, of course. And we've seen metrics out of that country this morning, which all three, as the first batch, came in under analysts' expectations, save for inflation, which was a little bit more moderate than expected. But other than that, I think the miners have been a buy for quite some time. That said, I would stick to the majors and the proven producers because the rest of the sector is basically too much of a gamble for my taste.
Well, Rio Tinto is really all about iron ore and China, as you mentioned. But I want to talk about platinum for a second. There was an article in the paper this morning saying a lot of traders are shorting platinum because they're not selling cars in Europe. Do you agree with this?
Well, I would agree with the first part of the equation. Indeed, Europe seems to be preoccupied not with buying cars, but with just keeping afloat. And of course, there has been some slowdown in car deliveries in China as well since January. But that said, there are other sectors in the automotive industry around the globe which are doing quite well. And I would point to the US as almost bumping back to pre-recession level automotive sales numbers. Of course, India and a couple of other places in Eastern Europe are doing quite okay. So when and if there is a rebound out of these two slowdown sectors, I think platinum should perform mainly because production costs being what they are for this group, were already, for some producers, under what it costs to make an ounce of the metal. And in case of platinum, I think it's a decent buy around the $1,400 level. Palladium certainly seems quite a good value around the $500 to $550 level. And if, in fact, the projections I read about this morning of about a 930,000 plus ounce deficit in palladium materialize towards the end of this year, specifically with the cessation of the sales of Russian official inventories, then we could be poised for a pop, probably of a larger order of magnitude in percentage terms than we could have for gold or silver next year.